So in this video, we're going to talk about the comparison between flag limit zone and support and resistance zones. Okay, so we're going to go into details of what flag limit zone is and what support and resistance zones are, and what are the advantages of using flag limit zones over support or resistance zones. So make sure to watch the video till the end. Hey guys, welcome back. So in this video, we're going to talk about the comparison between the support or resistance zones with flag limit zone. Okay, both zones are important. The flag limit zones has its own significance and the support and resistance zones have their own significances, but sometimes it's better to use flag limit zones where there's available, and at the same level there's support or resistance zones, and we're going to go into the details of why you should prefer using the flag limit zones over support or resistance zones. So first of all, let's talk about the comparison between support zone and a flag limit zone. So in case of support zone, the support zone forms whenever the price in the market bounces from a certain level multiple times. As we can see here, that the bullish trend was going on, and then after that at this level the price is bouncing back multiple times, and after that this level gets broken. So when the market bounces from this zone or this level like 2 to 3 times, then we say that there's a support that exists that's supporting the price, and because of that the market is bouncing back from this level. Okay, so similarly is the case in case of flag limit zone. First, let's define what flag limit zones are. The flag limit zones are formed when market holds the price for a moment. Okay, and those zones are important because then the market will bounce back from those zones. As we can see here, that when market was moving in the bullish trend, the market held the price for a moment at this level. As we can see here, that the market went from this level to here, then here, and so market was holding the price in this zone. That's why the flag limit zone is forming here, and after that we can see the market bouncing back from this level or this zone. So this is the formation of flag limit zone, in which it is holding the price in the upward or bullish direction, and similar to the case here in support zone. Now let's go through the resistance zone and flag limit zones, and then we're going to go through the comparison of why flag limit zones are important, or we would prefer using flag limit zones or support or resistance zone. So in this case, in case of resistance, the resistance is the level from which the market bounces back in the bearish direction. As we can see here, that the market is bouncing back from this level multiple times, and if we see the flag limit zone in that is similar to resistance zone, then in this case the market is held the price when the market was moving in the bearish trend, and then after that the flag limit zone was formed and market is bouncing back from this zone multiple times. Hey guys, I'm cutting this video to let you know that we have a supply and demand indicator that you can use in order to detect the supply and demand zones automatically on your charts in real time. Here's the demo in this video as well, so make sure to check the link to this indicator in the description of this video. Now let's go through the points of why you should prefer flag limit zones. So the first thing is support zone or resistance zones. They don't give us any specific boundaries or key levels, or like the exact levels that we should use while we're trading. Okay, they does not give us what should be our entry, what should be our stop loss. So these are important things, because whenever you are going to take any trade, you need to know where you should put your entry and where you should put your stop loss. So in case of support zone, we don't have those levels, but in case of a flag limit zone, we do have a entry point, which can be this zone, this high of this flag limit zone, in this case when the market is being held in the upward direction. So this high of this flag limit zone will act as our entry point, and this low of the flag limit zone will act as invalidation or stop loss level. So whenever we see the market going below this level, that means that flag limit zone is not valid anymore, and this zone gives much more pips for market to play with, because sometimes at a support level the market will give a false breakout and then again move in the same trend, okay, or in the same direction. But in case of the flag limit zone, we do have some pips that the market can move up or down, okay, and move in between, and then after that it will continue its direction, so it avoids the false trends or false breakout. So this is another important point. Now the points that we discussed for support zone and flag limit zone are also valid for the resistance zone and flag limit zone. So after that, let's go through an example to understand on the chart of why you should be trading with flag limit zones. So here we can see the formation of one flag limit zone in which the market was holding the price from here to here, and then after that it moved in the bullish direction. So after holding the price, we can see the flag limit zone is valid and the price is bouncing from this zone multiple times. As we can see here, this was the first bounce, second, and here is the third bounce as well. So like in this case, the market is bouncing from this zone, and this high of this flag limit zone will act as our entry point, and this low of the flag limit zone will act as our stop loss level. And if we look at another example in which the market is being held in the bearish direction, so this is the flag limit zone forming here where the market held the price for a moment, okay, and then after that the market went in the bearish direction but came back to retest the flag limit zone, okay. So this is another example, and we can see the market bouncing from this zone multiple times as well. And here is an example of a support zone that you see. Let me just delete this. So this is an example of a support zone. Now as you can see here, in case of flag limit zones, we have the high and the low, which can act as our entry point and our stop losses, okay. But in case of a resistance zone, or in case of this support zone, we don't have those levels, okay. We just have one price level that we can use for our reference, okay. So here we can see the market did give a false breakout, and if we had traded using the this support level, it would have been hit our stop loss, okay. So similar is the case in other examples as well, where the market is forming these flag limit zones and then retesting it multiple times in the future, okay. So another thing that is important to note about the flag limit zones is that once the price breaks that flag limit zone, as we can see here, that this zone formed here, and after that market kept moving above this zone, but finally it broke this flag limit zone. So after the market closes below the low of the flag limit zone in this case, then this flag limit zone will not be valid anymore. And another thing you should keep in mind is that the more the market tests a zone, the more weaker it becomes. So with time, because this zone is not going to be valid forever in future, so with time this zone will become weaker and weaker the more the market tests it, and finally the market will break this zone somewhere in the future. So this was an important thing that you should keep in mind. And these are some points, like the ones that we discussed, that why you should prefer using the flag limit zones. First, they give us stop loss and entry points, and second, they also give the market a little bit more room to play to avoid the false breakouts that a lot of times happen in case of support or resistance zones. So I hope you guys like this video. If you have any questions, please comment down below and I would love to answer them. Also, make sure to subscribe and like this video. See you guys in the next video. Thank you.